Hello everyone and welcome to today's major markets update. To be or not to be, that is the question. It is April 4 and yes, it is not a April 1st joke. And again, sorry for the inconvenience that I couldn't be live as we finally found the water leak under my house and it will be fixed tomorrow. But no worries, the regular update will continue on Wednesday. So we're all good and this video should find you well. Let's have a look at the charts. I'm going to start here with the S&P 500, and this is the chart from Friday, not changed whatsoever, where we see how last week the index bottomed right here in the typical wave 4 target zone. In the gray one and in the green one, nothing out of the ordinary. I said I expect this wave 4 to become a little bit more complex, like an A, B, C. So that is where we see the to be or not to be question. Is this a B wave or not? The B wave can easily go to 46.56 and then we get a drop before wave 5 happens, A, B, C. It's not necessary. We've done technically enough for this rally to continue to new all-time highs into ideally the 47.20s. That would be picture perfect, potentially even higher to 47.50. But one thing at a time. For now, the question is A, B, C, or 5. That's really all there is to it. There's nothing bearish going on. Why is there nothing bearish going on? Here is a chart of the S&P 500 where I compare the rally that started in October last year into, I would say, December last year with now. So I'm looking at 9 different indicators. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, let's go in order of importance or alphabetical, whatever you want to do. Bollinger Band. Late October last year, it bottomed here after having expanded, and then it went up. What do we have here? It bottomed last week after it had expanded, and now it's moving up. 2, we're above the 200-day moving average. Same. 3, we are above the Ichimoku cloud. Same. 4 and 5, we're above the 20-day and 50-day moving average. 4 and 5, the same. 6, here we had about a 2-day dip, and here we had a multi-day dip. It's about the same. 7, the RSI 5 reset itself by dropping below 70 and holding 50. Same. 8, the MACD topped and then continued higher while continuously pointing higher as well, meaning the histogram topped, as you can see, and we have the same setup here. A little bit more pronounced, that's fine. It's the same setup. Last but not least, money flow is actually higher now than it was in late October, but it's about the same at around 70. It's not 20, it's 70. Money is flowing into the index. So there are 9 similarities between now and then. What did the market do? It rallied and added another 5%. After that, we got a 5% decline and then another rally. But currently, we're just focused on this pattern here. Rally, drop. Rally, drop. Sounds awfully familiar. Rally, drop. Okay? So once wave 1 is complete, that is still my preferred view, we can then do nice mathematical equations to determine where exactly wave 2 should bottom. Because I still expect wave 5 in red, of course, wave 5 wave 5 of 5, sorry, that means Roman numeral 5 of Arabic numeral 5 to top at around 5,500 to 6,000. So once wave 1 tops, we know the length of wave 1. Then we know that wave 5 should ideally go to the 200% extension, maybe the 176.4. Can always extend, but then we have, of course, a nice way to determine where wave 2 should bottom. Okay, and then it's off to the races. That is still my preferred point of view. Or as I said on Friday, I really like the fact that the indexes rallied into the close. Going into the weekend with supposedly so much uncertainty going on in the world, investors were still ready to buy the index going into the close. And today did absolutely not disappoint it. Again, spot on, absolutely right, correct? So, we're not at the at the bottom line yet. Let's have a look then at the semiconductors. I got some people asking, oh, you haven't covered the semiconductors over several days. When I don't cover something, I just simply need more price data to understand what's going on. This is where we need to zoom out to see the forest through the trees and not try to overanalyze every single scribble. So what I see here, it looks like we might have topped already for a wave 1 and we are in wave 2. I've not changed the labels of 1, 2, 3, 4, and 5 whatsoever. Now, if wave 2 has bottomed, and this is where I had the label, right here in the ideal target zone in red, then wave 3 is now on its way. We have a wave 1 here getting pretty close. I was looking for 37.50. We got to 36.30. Pretty darn close on a relative basis. Again, how accurate can accurate be by kind of eyeballing things? And it's very hard to initially determine a first wave depending on how the first wave is going to subdivide. Is it going to be a diagonal? Is it going to be an extended fifth, etc.? It looks like we have some sort of diagonal here. And this wave 2 can also subdivide. It doesn't have to be completed already, but we are in this ideal wave 2 target zone. And if this holds, then we can target to ideally 45.30. Okay. If we break higher above last week's high, wave 3 is confirmed and on its way. Wave 2 can again still subdivide. I have too little price information available, but honestly, it really looks like the risk reward is really there with little downside risk and high upside reward. It doesn't mean there is no risk. It doesn't mean there's only reward. Place your stops accordingly, which is, in my humble opinion, Friday's low. Zooming out, bigger picture-wise, haven't changed a thing on this monthly time frame where I was looking for a high at around 45.10, 45.45. How does that align if we start filling in the Fibonacci levels? 45.30 as said. So this is starting to look really good. That wave 4 has completed. Okay, wave 4 has completed here, right in the ideal target zone, and now this wave 5 to 4,500 plus is on its way. I see no reason to change my tune unless we start going below 280. Remain the same. NASDAQ, how we're doing with the NASDAQ. Here's the NASDAQ100. And I think we have a extended third wave on our hands that normally should have topped in this zone, wave 4 in this zone, wave 5 in that zone. Again, that is simply the ideal Fibonacci based market pattern, but the market doesn't owe us anything. It doesn't have to follow anything. As long as wave 3 is not the shortest wave, and as long as wave 4 and wave 1 don't overlap, unless in a diagonal, we're fine. So we're holding the 14,400 level elegantly. We bottomed right here in this ideal wave 4 target zone, and it looks like we're on our way for this wave 5. Okay, where should this wave 5 top? I think somewhere around 15,500 to maybe 15,600. So far, so good. I am happy with this work. As long as we're holding Friday's low, we're rallying. And then we should see the retrace. Same for the S&P 500. We can then, once wave 1 is complete, make good calculations on where wave 2 ideally should bottom before wave 3, 4, and 5 in red take over. I see no reason to be bearish. If we go already above last week's high, there are then technically enough waves in place to have an impulse higher. Okay, then there is enough waves, 1, 2, 3, 4, 5 impulse. And then after 5 waves up, we must expect 3 waves lower, followed by at least 5 waves back up. So this is starting to look awfully nice. I like it. I just need to see the 5 waves up. Once I see 5 waves up, all the bears be damned. You can say whatever you want to say. The wave 2 pullback will all wrong foot you, and that is the excellent buying opportunity. Dow Jones, so far so good. Also here, the ABC potential. It doesn't have to be that way. Just on a frame perspective of wave 4s are often long drawn and complex. It is possible. But as I showed you for the S&P 500, right, if past performance is a guarantee for future results, or as Mark Twain said, history never repeats itself, but it does rhyme. then this comparison with 9 similarities between now and then suggests we have already bottomed for this red wave 4, and we should now be on our way to red wave 5. A break above last week's high confirms 5 waves up, even if this becomes a irregular, flat, more complex wave 4, meaning A, B, C. Fine with me, 5 waves up is 5 waves up. End of story. We're not yet there yet. We can't confirm it, but it starts to look awfully good, also based on the past performance chart. Okay, it really helps to look at what prior chart setups led to. That will then give us an indication what the current chart setup will most likely do. We have not even gotten close to the bullish cutoff level. Looks good. Now here's the IWM. I don't like the price action over the last 2 to 3 weeks, so I gotta give this more time to fill itself in. I'm still bullish on it, but it might look like a diagonal type of advance instead of a regular impulse. Fine with me, but I need more price data, and I am honest and realistic about it, where I say I need more price data before I can determine what it is. So that looks all really good. All right, so bottom line. Last week I showed the extreme breadth readings, some readings so high none of us has ever seen in their lifetime. You really unique times, my dear followers and members. That is amazing. So that is something you can tell your grandchildren. When I was 50 years old, this breadth reading was extreme, something like that. And they will go, oh, grandpa, you're full of it. Anyway, yeah, we had that association with kickoff waves. Those kind of high breadth readings are at the end of declines, and they're not associated with the start of bear markets or even middle of bear markets. 9 out of 10 times, it's a kickoff wave or the end of a decline. I also said those very high readings are, of course, too much of a good thing, and some backing is necessary. We cannot get extreme reading after extreme reading after extreme reading ad infinitum. That's, of course, impossible. We need to back off, reset the extreme reading, and then we can move further. And that's exactly what the market has done mid last week. So the backing off would then either be the wave 2 or the wave 4 of wave 1. In my humble opinion, it appears to be the latter, wave 4 of wave 1, with maybe the exception of the semiconductors. But as I said, fourth waves are notoriously tricky. So the current rally can still be wave B of wave 4, and wave C of wave 4 is still to come. So to be or not to be, that is the question. However, when I compare the current chart with that of the October-December rally from last year, there are 9 similarities, which all suggest that wave 5 of wave 1 is now underway. And therefore, the upside targets are on the charts for this wave 5. Okay, look at the charts, see the target zones. Doesn't mean we'll actually have to top there. The market can reserve the right to do whatever it wants to do, as long as wave 3 is not the shortest wave, and as long as wave 1 and 4 don't overlap when we're not dealing with a diagonal. So we have some ideal upside targets, and we'll see if those get reached or extended. It's fine. I think the safe trade is to the upside and not to the downside. Semiconductors could be in a different Elliott wave count, in that wave 1 and wave 2 have already completed. Why? Internally, the price action looks like a leading diagonal of the lows made earlier this month or earlier last month. And it has so far topped for this wave 1 and bottomed for this wave 2, kind of where I was anticipating it would. Then if we assume wave 2 is already complete, it can always come a little more complex and go a little bit deeper, then the ideal Fibonacci targets for wave 3, 4, and 5 align picture perfectly well with the bigger picture into the 4500s for the semiconductors. Unfortunately, and I'm honest, I need more price data to elucidate the IWM/Russell chart. It's fine. I think one is really strong by acknowledging, you know what, I don't know it yet. Let's leave it for now. But I remain bullish on the IWM as well. Now, last but not least, if you have trouble trading the indexes using my work, please consider my trading system. It's an ETF-based trading system, short-term, intermediate-term, long-term. And here are the results for year-to-date, the NASDAQ and the S&P500. So for the NASDAQ, we're trading the QQQs, the QLDs, the TQQQs, etc. Okay, and here is the results. Short-term, my system is year-to-date down 2.5%. Now you might think that's horrible, but please remember the NASDAQ is down 7%. So we're beating it. And short-term always gets stuck in more upside swings or whipsaws than the longer term. The intermediate term is up 11% for the year, okay? 11%. Easy peasy. All you need to do is follow the trading signals. My long-term system is up 37% since April 2020, whereas the actual QQQ is up 70%. It looks a little dismal. It's because mostly that we're currently, according to the system, in a inverse ETF, and that's pulling down the numbers. But once it reverses, I think we get some really nice gains. Again, beating markets is really difficult, but getting consistent gains without a headache is much more important. That's what matters. Beating the system or the index is then number two. First, you want to make profits, right? Actually, first you want to minimize the losses, then no losses, then you make profits. So here's for the summary table for the S&P 500. My short-term system using the 3-time ETFs is up 4%. The intermediate system using 2-time ETFs is up 7%. And the SPY is actually down 4% for the year. So massive market beating results. Easy peasy. All you need to do is you get the emails, you follow up on it, no questions asked. This is the results you get with, of course, a little bit of variability because your price entry might be different. Sometimes it's in your advantage, sometimes it's in your disadvantage. It happens. It's okay. Long-term system is pretty close to actually following the index passively. Easy peasy. So really easy peasy. I can highly recommend it. A lot of people use it on the side with my work. And you know what? It's all about making money. So this makes you money, use it. Why not? If you don't like making money, I'll give you my bank account. You can send me your money. All right. Making money is what we're doing. If you want to do it yourself, I'll build it for you together with you. All good. All right. So just to show you my trading system. Again, I'm not trying to sell it. I just want to make sure you all make money the easy way. So this is the short-term system, and you can see we have about 2 to 3 trades per month, okay, with entries and exits. They're partial selling into strength, and you can see here the nice gains we had in March. All right, so far so good. Same here for the SPXL, following the S&P 500. You have about 2-3 trades per month. Nothing out of the ordinary. End of the day, about 10 minutes before the close, you get your signal. Look here at the 2-time ETFs, you get a signal about a couple of times a year. That's it. Massive gains. Why? Because these systems don't care so much about intra-week swings. They kind of eliminate the noise. And here is then the QQQs. And as you can see, initiated 2020 and won't get stopped out until 2022. Long-term trading, right? Several months to several years. That's what you're trying to do. My SPY is still long from 319 in 2020. Still long. It won't sell it. It will hold it. And it's just running along the index. Fantastic. I think it's great for people that want to get some help with the trading in the fact that it always sets stop. It always tells you when to sell. You get discipline. Right? If you have no discipline, then this system will teach you the discipline, which is 90% of the work in trading. Okay, can't say it often enough. And you get good returns that will pay the bills, so to say. And remember, a system that can prevent you from any heavy losses is worth its weight in gold. Yes, there's no gains yet in the short-term system, but you have less losses than if you would passively index. So it is absolutely market beating. And this is rule number 1, minimize your losses. That's what you're doing. Minimize it. Rule number 2 is no losses. And rule number 3 is making profits. And that's what these systems are doing. Stick with it. Eventually, you will get the returns you're looking for. Again, can't guarantee only winning trades. No trader can, no system can. That would be delusional, naive, irrational, not realistic, all those bad things to only expect winning trades. So we have to sit through the bad losses, and then eventually the good times will come to us. As I said before, a lot of people unfortunately sell their strategy right at the bottom and then jump into a new strategy, but never let it go to fruition, meaning when the systems are finally kicking into gear and working. And then eventually you get into a rut. There will be a couple of times where it's not working. Don't give up, stick with it. That's the most important part. If you already have a system, use it, be strategic, use it, okay? If you have trouble, please find help. My systems can really help you. That's what I want. I want you all to make money. Easy way, okay? Doesn't have to be complicated. All right, that said, again, to be or not to be, that's pretty much where we are at. For the indexes, I really think that we have a nice analogy with October, December, and that we've struck a pretty decent wave 4 low. Can always get more complex, but I don't think that we're going to go much below the Friday low if the current rally is only a B wave. I'll have more data available on Wednesday to see if it is a B wave indeed. But as I said on Friday, the close that was green on Friday already was foretelling that traders were confident going into the weekend, and today did not disappoint. So far so good. And once we get the wave one complete, be it with a few minor tweaks in the sense, are we going to do ABC or straight to new highs? The comparison with October, December 2021 suggests straight to new highs. Then we have a very nice length of wave one that can help us determine where wave two should bottom to get us to the upside target of 5,500, 6,000 on the S&P 500, to about 18,000 on the NASDAQ 100. And I think we should go to about, I believe, somewhere in the 40,000s for the Dow Jones, and the semiconductors 4,500. All right, so far so good. Pleased with the work I've been providing you. I'm not concerned. We have not reached any bullish cutoff levels, not even close. We're bottoming right in the ideal wave 4 target zones. Easy peasy? No, never easy, but so far so good. Let's see what we get on Wednesday. Take care, trade safe, and I'll see you all on Wednesday. Oh, and last but not least, the trading systems have now a 2-week trial period, 50% off. You'll only pay $25 for the first 2 weeks. Super easy. Now, 2 weeks is honestly way too short to evaluate a trading system. You need to stick with it for honestly 2 years to get something like it. But I want to be fair and just and give you all a little bit of a rebate, see if it works for you. Take care, trade safe. See you all on Wednesday. Bye.